Today is Sunday, February 12th, 2023, back for a market update and review. And before I get into it, I just want to ask you guys, I'm recording this at a different resolution. I'm using my ultra wide display, which I prefer to use, but I don't know how this is going to appear on your end if you watch this on your phone or your computer, or if this is like you can't read the numbers or anything on the side. I don't know if this is ideal for you guys. So just let me know. It'll inform me how I go about this in the future. Maybe I can do this, but make the numbers bigger on the scales, or go back to how I did it before. So looking back on Friday, there's a few trades. I posted one of them on Twitter, but there was a couple others that I got involved in. Not big positions, but I thought the price action, I thought the delivery was very clean and clear on Friday. If we start by just looking at the weekly range, how it played out. Monday consolidation, Tuesday consolidation until the news, big rally, big dump, took out the sell side, took out the buy side, consolidation Wednesday, breakdown during Wednesday, showing a support or a false support here. Overnight, Thursday, we get another rally, which is just a Judas back into premium from high to low, rally back up to premium, and then sell off Thursday, attacking these lows. And then Friday, a push lower, but on a higher time scale, we're coming into some higher time frame support, which you can see by even just looking at the hourly chart. So while I am bearish in terms of where I see the recent momentum, particularly coming out of Asia and into London session, where we get a very nice breakdown below the Asia low. I'm not bullish for like new highs on this day, but I am bullish if I see a bullish setup. If we are extended, we're not going to just sell off forever in a straight line either. If we have some support levels on the higher time frame here and I get a lower time frame setup, I'm going to take that back into the range. Again, not targeting, very high, probably not even above Asia. At a maximum, it's going to be the high of Asia, and if I keep another piece on, it's going to be a very, very small position. So that's my framework at the time of New York Stock Exchange open. So let's look at our side by side. At the time of New York Stock Exchange open, we can see we have a type 1 liquidity grab. So we have these lows making lower lows. So turtle soup of the lows here. We have higher lows here on NASDAQ. And we get a displacement. I think it's probably better to see it on the 5-minute at this point. You can see all before 9:30, higher low, lower low, displacement, leaving these gaps open here. So you can see right off the bat, the great setup that we had, particularly on S&P. Now I chose NASDAQ in line with this high, but it's really about the key level for me that was involved here. So if I go back onto this chart and I can see that on a weekly, I'm always checking the weekly chart throughout the week, not constantly throughout the day, but if we've been bullish week to week and now we are selling off within this range, there's usually going to be weekly levels where we can see, and by that I mean objective weekly levels, previous open, high, low, and closes. So in this case, we have this previous week's high right here. So the price has been trending above. We look to these old highs as a possible support area. And on the daily chart, you can see as well, what is this? Down close. So this is a propulsion block. This is an order block here. Rally comes back down into this down candle. That's what makes this a propulsion block. So you can use the body, you can use the wick. You should be mindful of both, especially when you're dealing with higher time frame, because it could just react to the high and that would still be valid. You're not going to trade based off of it, or I'm going to use the lower time frame. This was a second trade that I'll go into later, but for the first trade of the day, you can see that this was where we had our type 1, and it's actually kind of a false start as well, because we have a initial move higher before the move down into here. So you could also see this as a type 3, but we also have this gap in alignment with this higher time frame level. So my entry was here. My stop was below this low. Came a little too close for comfort, admittedly. And if we look at the time, this was at 7 a.m. Sorry, 7 a.m. Pacific time, my time. So 10 a.m. New York time when we had a news release. And so we know that 10 a.m. can be a turning point in the market, which can be useful both for entries or exits. In this case, it would be useful for an entry because we have the higher time frame, this weekly level. We've been on a higher time frame, a bullish market. Now this week we've dropped off. So again, we're not sure about how far this is really going to go, but we can look at this range as a reference point from high to low, and we can target areas at the high end of the range. So if you look at on the 15-minute, you can see that the high of the day or of the New York session reacted off of this imbalance. At the time of the news, it's wicked down to this 15-minute fair value gap in here, an order block. You can say these down close candles are an order block. And where does it seek? It seeks the opposing liquidity of the same similar time frame. So it pushes up and it hits this 15-minute fair value gap. These up close candles you can see as an order block. And so no, I didn't target. I mean, I didn't hold till there. I was out at the high because again, I'm going to be trying to get the low hanging fruit. Even just to this high, it's basically a 3-hour trade. And it's a trade that plays out in a matter of 5, 10, 15 minutes or so. So the opening range it's not uncommon to get a lot of volatility. And as traders, it's nice to have volatility if you have a framework in mind for how to trade it and manage the risk, not just blindly buying or selling. So nice type 1. And that was what I posted on Twitter. Now, if we look at what happened after that, pretty cool too. How do you see this 5-minute? We see this higher time frame. Okay, so if you could look at it, you could also play the short side here, which I did not play here. But high to low, we have that clean breakdown. We come back up into this area of interest, which we already talked about. Look at the close on the 15-minute. Very nice rejection wick. So I do pay attention to wicks and candle structure and candle formation, not in the sort of retail way necessarily, but I do look at it as to confirm certain things. So again, now we have it on the 5-minute as well. These wicks are respecting the fair value gap here, and the model on the rejection wick at the key area of interest in premium level on the higher time frame. You can see, now this wasn't clean enough for me to take, but it still acts in a way that's similar to, you can even use this. I noticed that it does come very close to it and sell off here, but you probably have to actually go to a 30-second chart to see the breakdown properly. So you can see that we have high, low, higher high, higher low off of this gap right here. Higher high, market breaks down, not displacement for me really, but we can see how that rejection wick and retest on the higher time frame looks like our model on the lower time frame. Again, not very clean for me to take, but even here, this is probably the best place to wait for it because this is where you get actual displacement. And that's not displacing through a low, but you could read it like high, low, higher low, tries to make a higher high, fails to make a higher high at our level of resistance, displacement back down. And this gap here is the one that gives you the best entry right there to sell off back towards our low here and our low of day up to that point. That could have been the ultimate target. But anyway, that wasn't the trade I took. The next trade I took was here back up. So as I showed you before, we had the, and this is our lunchtime reversal. So on the daily chart, we have this, again, we've hit some buy side liquidity here. So that's why we've been consolidating and retracing. But now we're in a relative discount from, let's say, this low to this high. And I'm not saying that I'm going to predict that price is going to react from here to make a new high. It could, but that's not what this play is about. This is just saying, hey, we're at discount levels on the higher time frame. It is not unreasonable to expect that there would be, at least on a short-term basis, a reaction off of this area. And we confirm that with the price action on the lower time frame at key times of the day. So at noon, so this is our lunch hour, price does a perfect lunchtime reversal. So, if we look at it just from a psychology perspective, the market is selling off. It's breaking this range, which it's been in all week. We come into a level of support. So there's a lot of people that are going to be late to this move, that are going to see this sell off and are going to try to get in basically late, chase this market down. But we know we're at a support area. So we are not afraid of trading it back up, targeting, their stop losses essentially. Now, S&P ended up going above this high. NASDAQ didn't. If I show you here, you can see the similar structure on S&P. People were trailing their stops. I know ICT was talking about this and his recap over the weekend. But the weekly range is likely to be formed the later we get into the week. Yes, it's possible that this could have been a very sharp decline after, even on Friday, but not as likely when you consider that we're already in Friday, and it's more likely to retreat back into the range more often than not. Especially since I don't think there was any major news drivers on Friday, if I recall correctly. Nothing like a non-farm payroll or something that would really change the sentiment of the overall market direction and cause it to trend really, really hard into a weekly close. So with that in mind, we look here, we've traded into this daily level and we get a very nice close here. Now look at what happens at the same time that NASDAQ is trading into that daily level. So if we look here, the same time that this low on S&P was put in, we're here on NASDAQ. And at this time that NASDAQ took out this low, S&P is all the way up here. So there's definitely underlying strength in S&P comparatively. But I usually try to work off the charts that have the clean higher time frame level. That's just, to me, what I typically like to do. So there was an entry model there. So again, it was during lunchtime, the earliest entry. So I didn't get in right at the earliest entry because I usually don't want to trade in the lunch hour most times. But if you just look at off the low, we take out this short-term high, this high, we come down, react off this sell side imbalance, come down to this fair value gap. That could have been the first optimal entry to get in. Price expands higher, crosses this fair value gap, this bearish one, consolidates, uses it as support here, continues to push up, does the same thing through all of these bearish gaps. So we're clearly in a bullish delivery here as we end the lunch session. And when price takes out a low like this, and we're moving in a certain direction like this, and price takes out a low like this, I want to play if I'm seeing a buy set it back up, I'm not aiming up here. It's the low hanging fruit that we want. And if we look particularly at this structure here on this leg down, this is another thing that made it a better trade. So we have this move down here that I'm looking at, this leg down. Look at all the candles. Look at how each candle is making a lower high relative to the next candle. So no candle is being taken out before it as it moves down. So what does that mean? It just means that there's untapped liquidity basically below all of these candles. And so when price moves back up, it moves back up with very little resistance, because every, let's say, buy stop that exists on here as people are trailing down, it just becomes fuel for more buying to come. So how am I explaining this right? So as the market starts catapulting higher, that will just trigger more of these buy stops to engage, which means those are orders to buy. So it's just going to keep, so there's profit taking on shorts that people on, informed traders are taking profits. Let's say here, I hate to say buy pressure, but people are closing their short positions. And then simultaneously, these buy stops are being hit, which are orders to buy. And so the market kind of moves through. There's very little resistance here and comes up to this swing high right here. And that's where it ultimately couldn't go any higher. And then there's this gap that it completely filled in. So I saw that as a scenario 4 buy setup. It was basically using the 5-minute chart. And once I saw this close above this gap right here, we've scenario 4, because yes, we've broken out of the DR opening range low. So yes, the high is likely to be in for the day, but because we've identified this higher time frame level, we've identified this as a liquidity grab. We've confirmed it with SMT divergence on S&P, and now we're seeing bearish PD arrays be violated on the way up here. So this one was violated during the lunch hour, and now we're at the beginning. So this is at the last 5-minute candle before the afternoon session starts. The 1255 candle gets a solid break above here after all of these wicks wicked and rejected off of this bearish fair value gap. So once we got this close above, that was a signal to buy. And I was basically waiting for this to tap back into here, but I just kind of, as it got close, I just pressed the button, and where was my stop? It was below the body here, this down close candle here. Actually, I think it was better than that, because I think oh no, I think it was below. I think it was because it was a better risk reward. I remember didn't want to see price go back below this fair value gap, especially since, like I said, all of these highs had not been rated, and so I thought we could get a pretty quick move, and we did. And then as it takes out this high, we have this fair value gap. We have a scenario 3 where we have the DR confirmation below. We come back, we take out a swing high. We have this gap. We have this rejection, this confirmation wick. And now we go down to the, let's say 1 minute. You can see how price changes trend here. So that 5-minute wick off of the key area after taking buy side liquidity is our entry model on the lower time frame. So we break this low after it reacts off the bullish imbalance. So if it was going to continue higher, you would think that it would hit this fair value gap on the bullish side and then continue higher, but it failed to make a higher high, then broke down with displacement. We have our fair value gap here. And so it's not unreasonable to take a trade, put your stop above this bullish candle or above mean threshold perhaps, or above the high if you want to be safe. And then you just target discount areas or time. You wait until you get to a certain point in time. And, this was 3. I partialed out. I was a lot more aggressive. Because I thought we were going to be more likely to push back up. So I wasn't expecting this to make a new low necessarily, and I didn't think it would even come this far down. But what you can do is you can just look and say, okay, from low to high, basically want to target maybe 50%. So, and I took most of my position off kind of around here, and then kept a little runner that took me out. And then I was done for the week after that. So I just want to show you that on the same day you can get scenario 3s, you can get scenario 4s, you can get opening range setups, and it's still the same sort of logic. This is a liquidity grab that happens over lunchtime with the SMT. It's the same setup I traded opening range. It's just different time windows, but I'm looking for the same kind of thing. So that's why I see my trading as relatively simple, because I'm not really doing drastically different things. And I see scenario 4 as the same kind of thing as a scenario 3. It's just it's just in reverse if you think about it, because it's a liquidity grab at a higher time frame level. This is the scenario 4. Even though I got in here, this is the premise of it. And a scenario 3 is the same thing. It's a liquidity grab not necessarily at a higher time frame level, but it's liquidity grab at a key level, point of interest, still a higher time frame level relative to the 5-minute chart. There is this fair value gap as well on the 15-minute. One is trading in the direction of whatever the break was. One's going against the direction of the break, but it's the same type of logic. That's how Friday played out. And now we're looking into the next week. I don't know if I'm going to do like a real forecast right now because I don't really know yet. We have CPI on Tuesday, but Mondays have been pretty good. In general, I usually see my setup on Mondays in the opening range. So I'm going to keep a lookout, but we have this high. We have made a slightly lower high here. So I'm going to be watching for, let's get rid of this for a second. I'm going to be watching for this low. I want to see, are we going to be breaking last week's low? It's an inside bar, so we're consolidating. So it could be a break that then regains the low. If that happens aggressively back in the range, then I would see that potentially as a bullish signal. But if we get an impulse below last week's low on the lower time frames, of course, if we get an impulse on like the hourly or 4 hourly, then I would see that as indication that we're reaching for lower prices and that it's like a breakout. And I would see this as resistance, but we have to see how the market, how it gaps open, if it does, and which direction and what happens after. So I don't want to really guess. I mean, I do feel like my gut tells me that we're still in a bearish environment. It's not as clean here, but on S&P, I still see this. I think I mentioned this in a previous recap. I still see these bodies as like the range high, if you will. We've been in this range. Let's put it this way. It's been a resistance since May of 2022. On a monthly level, we've never really, like every probe above this has been rejected. So I'm not about to guess and say when that's going to break the opposite way. And so you can see that this monthly candle of February has already kind of wicked up and we've been rejected just like we have these other times. That doesn't mean it can't break out, but you know, we have half the month left. So, you know, if we get a wick like this, it's, to me, I'm going to look at it like this. Are we shaping up to get that same kind of thing that I showed you on the 5-minute and 1 minute on the higher time frame? We're going to get like this monthly wick, and then we're going to see a model on like the daily time frame where we would expect maybe the next month to see some expansion lower. Like that's if this monthly candle closes like this. We don't know how it's going to close yet. So that's the kind of thing I'd be looking for. So, you know, we could see maybe a move like this, and let's say we get that monthly close by the end of the month, and then, you know, maybe it's something like this, and then we get our monthly model, our daily model. So this low would be taken out, this low that forms off of this order block, this PD array. Maybe this is what happens. I'm not saying it's going to, but I don't feel confident in saying that that's not going to happen based on like what the monthly chart's doing. So, you know, but if we get a good monthly close out of this range, then that could be interesting. That could be interesting. So again, this is S&P, and we do have, you know, the reason why I could see another move higher is because this stands out to me, this volume imbalance on the weekly chart. So if we, you know, in the next couple of weeks, react here, reach off, then sell off, you know, so maybe this doesn't make a lower high, maybe this makes a higher high into that volume imbalance above here and then breaks down, and then could still play out like that with the monthly wick and the daily model breakdown, fair value gap. Anyway, so that's just something I'm keeping an eye on, but too hard to say. As of now, we're in this area where we could see a bounce. We've reacted with a bullish close, but I think CPI will be a big help to see on Tuesday. But I will still be mindful of these levels. I'm going to put these levels back on my chart, basically. So I have this weekly level, but I know that last week's low is where this order block is, and sometimes it takes a couple of candles to properly bounce off of one. So this could be Monday. So this is Friday, and maybe Monday taps into again. We get another type of reaction back up. That's very possible. So we'll see what we get. We also have this volume of balance just above. So if we are going to see a move higher, I'm going to just keep an eye on that. If this is a resistance now, we have that lined up with kind of a gap here, but I'm not going to predict the top. So that's what I'm looking at. And hope you all have a good week. Hope this was a helpful video, and I will be back again soon.